Evening. Let's start, the presentation. This topic is absolutely of a great importance as Finance Act 2024 has made ISD compulsory. Once the amendment is notified, the ISD will be compulsory. So it's it's essential. It's a timely, this seminar has been arranged right in time by the Taxmann. I'm thankful to Taxmann for giving me this opportunity to share some thoughts on this important topic with participants spread over India. So friends, let me start first with what is cross charge. As you are aware, friends, that two or more entities of the same legal entity, whether in the same state or other state, are regarded as distinct persons. You are aware, earlier there was you can take the registration, separate registration for the separate verticals, and now you can take the separate registration for a different place of the business in the same state. So there could be for one entity, there could be a multiple registrations. And throughout my presentation, I will call that multiple registrations, that establishment as a distinct entities. So cross charge is very relevant where there are, the head office, main office, central office, and many distinct persons or many distinct establishments. Cross charge is not defined under the GST law. It is a popular terminology for the, charge done by the head office to the branch office and vice versa. How come the cross charge? What is the legal backing of this cross charging? Why there is a concept called cross charging? If you read the following provision together, it triggers the cross charge. See, we have Section 9 of CGST Act, levies the tax on supply. Supply 7C, Section 7C, it deems certain activities which are listed in Schedule 1 to CGST apply to be a supply, even if it is made without consideration. So supply made without consideration can also be regarded as supply. And entry 2 of this particular schedule, provides that the supply of goods or services made between distinct persons in course of further of business shall be treated as supply, even if it is made without consideration. So any transaction between two distinct persons of the same entity, even if it is made without consideration, will be treated as supply, and it is liable to tax as per entry 2 of the Schedule 1, read with Section 7.1 and levy Section 9. So the cross charge triggers because it is presumed that HO, there are certain internally generated services which is being used, or the HO supports the various distinct entities, various branches, various depots, various factories registered in a different registration number. See, it supports in terms of the accounts. Accounts are centralized, IT system is centralized, CEO, CFO services, banking services, all tax compliance services, HR services, usage of brand name and logo, marketing services. All these things are provided usually. All these activities are undertaken at a HO or centralized office. And the benefit of all these services are going to all the units, all registered units, or all distinct persons. So the concept is services are received. All these services are received and consumed by the HO, and it in turn provides the support services to various distinct entities. Suppose you have a factory, your HO is in Maharashtra, you have a factory in Goa, you have retail outlets, say in Delhi, and you have service center across all the state. The benefits of all these services are ultimately reaching or going to this particular, distinct establishments or distinct entities. So the concept of cross charge, because HO is providing the services to distinct entity, business support services to distinct entities, though it is providing without consideration, but it is deemed to be a supply which is liable to GST. So, in case of a multi-locational, I have already explained this. So, these are treated as all these services, whatever HO provides. Basically, HO provides the support to all its branches, all its depots, all its retail outlets, factories. All these things are deemed to be a service. And once it is deemed to be a service, we have to value that services. And Rule 28 prescribes the value of supply between the distinct persons. First, you have to try to find out the open market value of the supply. Generally, you will not have any open market value of supply because it is entity specific. Where the open market value is not available, value of supply of like kind and like quality, you will not have this kind of, because similar kind of quality, similar kind of the services or same kind of services are not being provided by any other entity. It's a very entity specific. So the value is to be determined under section 30, rule 30 or 31 of the CGST rules. So usually, the cost plus concept, whatever, you have to allocate the cost of provision of all these services, you have to allocate, mark up 10% thereon, and this will be the cost of services. But there is a second proviso, which says where the distinct persons are eligible for full ITC, then whatever value, declared in the invoice by the HO centralized office will be due to open market value. But this condition applies only when recipient is eligible for full ITC. Now let's see, certain issues of the cross charge. The biggest issue all these years was whether employee cost, which is a huge cost for any entity, is to be included in deciding the value of the cross charge. There are advanced ruling authorities, there are the decisions of advanced ruling authorities which says it should be included. We all know that advanced ruling authorities, the rulings of the advanced ruling authorities do not have any general binding precedence, but it has a persuasive value. So we have, two celebrated rulings. One is a Columbia SCI Hospitals Private Limited. It's a triple AR ruling by Karnataka Authority, and Cummins India by Maharashtra triple AR Authority. And they say it has to be cross charge. Thank God, this controversy is set right by CBIC Circular number 199/11/2023, wherein it is clarified at point number 3 of the table given in the para 3. It reads it is very unambiguous, very clear guidance. In respect of internally generated services provided by HO to the branch offices, the cost of salary of the employees of the HO involved in providing the said service to the branch office is not mandatorily required to be included while computing the taxable value of the supply of the services, even in cases where full input tax credit is not available to concerned branch office. So it's a big relief because departmental circulars are binding on the authority. So, this particular issue has been really sorted out. But let's see, how does one interpret the phrase recipient is eligible for full ITC? There are 4 situations. There could be a branch office or a distinct person deals exclusively with the taxable supply. In that case, the centralized office or HO can put any figure as a value and it will be accepted under the proviso to Rule 28. There will not be any issue. But where the distinct person deals exclusively in the exempt supplies, definitely you have to value your services at a fair value. That is, cost base, you have to value it at a fair value. You cannot put any figure. So you have to put it, you have to value it at a reasonable value. Where the distinct person will be taxable as exempt supply. In my view, even in this case, if a assessee is dealing in the taxable and exempt supplies, definitely he doesn't get the full credit. the credit attributable to exam supply has to be knocked off or has to be taken out. So even in that case, we have to, the assessee has to value these services at a reasonably fair value. Where the distinct person is in SEZ unit having 100% export turnover, you may be having a one SEZ unit in that business entity. So SEZ unit supply to the SEZ unit. You can do the supply to the SEZ unit without payment of the tax, provided that services you are providing is covered under authorized operation. And I've seen the list of the authorized operation issued by the Ministry of the Commerce. The business support services is covered under the list of the authorized operation by the SEZ. And that's why, in my view, while you can raise the IID invoice on the SEZ, but it can be at a nil rate. There should not be any issue on that. And where the distinct person is EOU having 100% export turnover, so in that case, you have to allocate, and even the export turnover is a fully taxable turnover, though it may be taxed at the EU might not be paying EOU may be exporting the goods or services without payment of tax, but in that case, you can put a value, any value under the proviso to Rule 28. So friends, cross charge. Now I am coming to the ISD mechanism, the most cumbersome exercise is ISD mechanism, how to distribute the credit. I will just take step by step. Number one, let's first understand the relevance of the ISD mechanism. Actually, the concept of ISD mechanism is an old concept, and it has come, it was introduced in the excise regime. Friends, you are aware, in an excise regime, the excise registration were factory-wise registration. Every manufacturing unit was having the independent excise registration number. And a company or business entity may be having multiple factories, various factories spread over entire country. Take the example of ACC. ACC were having many cement manufacturing units in various states, and they were having the corporate office or main office in Mumbai. So the HO was incurring huge expenses, and on that service tax was being paid. So that service tax credit, in order to facilitate that service tax credit should be passed on to the individual factories. This ISD mechanism in those days was introduced. So this concept has continued in the GST also. A business entity may have the multiple registrations in GST regime, and hence necessity to ensure that proper distribution of tax credit taken by centralized head office among the various registrations. And friends, GST, we all know, is a destination-based consumption tax. So the revenue of GST accrues and flows to the consumption state. So ITC, input tax credit, relating to that revenue should also travel along with the tax revenue to the consumption state. So consumption state is getting tax revenue, should bear the burden of the ITC, and not the state in which the centralized office, like in ACC, the Maharashtra will have the liability to pay liability to give credit of the ITC. So consumption state getting revenue should bear the burden of ITC, and not the state in which centralized office of entity procuring services or receiving tax invoices from the vendors. So this is the concept. The ITC should travel along with the ITC should travel in the state where the revenue flows. So these multi-locational entities usually have centralized office or head office accounting, and they have the system of centralized accounting and centralized payment system at head office, which receives an account for invoices for services consumed by distinct entities, by all its distinct entities having the different registrations. So what ISD does, ISD facilitates the transfer of the ITC from centralized office receiving the tax invoices for services to the offices consuming, or to the distinct entities consuming said services. If ISD mechanism would not have been there, then centralized or head office cannot claim the ITC, as corresponding input services are not used by the HO exclusively for its own business. Because these are the common services. One cannot say that 100% of the common expenses are incurred by the HO for its business. And distinct entities receiving the services will not be able to claim the corresponding ITC, as the vendor invoices were not in their name or are not in their name. So ISD mechanism, the purpose of the ISD mechanism is to distribute ITC in a most appropriate manner. Just I am putting the figure, just I am putting the diagram. For example, an auditor in Mumbai is providing the auditing services to a company based in Mumbai. And he raises the bill on Mumbai, the GST is 18,000 rupees. And this ABC Limited has two factories, one at Gujarat, another at Goa. So out of 18,000, it has been the ITC distributed, and Bombay do not have any business. Bombay is only having the HO. So this ITC of 18,000, is distributed as per the rules between the two distinct entities. So ISD mechanism enables ITC to travel from Maharashtra HO location to the service consumption units in Gujarat and Goa. Friends, if you really want to understand the concept of ISD or ISD mechanism, these are the sections you should thoroughly study. Section 2, bracket 61 CGST Act, we define the input service distributor. What do you mean by input service distributor? Has been defined under section 261. Section 24, Roman 8, it gives compulsory registration. It says registration is compulsory for input service distributor. Then you go to section 25, bracket 4 and 5, which says multiple registrations are deemed to be distinct persons, though they are the part of one legal entity. But for the purpose of income tax, it is one entity. Income of all units, only one return will be filed. But here, it is in GST, it is a multiple registrations are deemed to be distinct persons. That's why the transaction between them is treated as a supply. Then you have to go to the proviso to Rule 8.1 of the CGST rules. Separate application is to be done for ISD registration, even for the assessee who has a regular registration as supplier. Please understand, in my Bombay office, in Maharashtra, also I may be having the unit, I may be having the rental income, so many income, so I should, my normal registration should be separate as a supplier. And separate application is to be done for ISD registration. So this is some mandatory provision. Your one normal registration cannot act as a ISD registration. ISD registration has to be separate. Rule 36.1 of the CGST rules allows ISD to avail ITC based on the invoices issued by supplier under section 31 of the CGST. Like normal supplier who avail the credit based on the invoice of the vendor, the ISD can avail the ITC based on the invoices issued by the vendor. Rule 36.1 of the CGST rules allows the separate registration of establishment of the same business entity to take credit based on the debit note or invoices issued by the ISD. So once an entity has an ISD can issue the ISD invoice to the distinct persons, and all these distinct persons are entitled to take ITC based on the invoices issued by the ISD. Rule 54 prescribes the details to be furnished in invoice by the ISD. Section 20 of the CGST Act provides the manner of distribution of ITC by the ISD. Friend, this ITC, accumulated ITC availed by the ISD, has to be distributed in appropriate manner between various units. So this rule, section 20, provides for the manner of distribution of ITC by ISD. Rule 39 of the CGST rules prescribe the procedure for distribution of ITC by ISD. Section 39(4) of the CGST Act, it says ISD return to be filed on a monthly basis on or before 13th of next month. So friends, on 10th, you will file GSTR 1 of your normal unit. On 13th, you have to file, on or before 13th, you have to file the ISD return. You have to give an account to the government what ISD has received as a credit and how it is distributing. And please understand, whatever you have received has to be distributed. Section 21 of CGST Act provides for recovery of excess credit distributable to any unit along with interest, and proceedings under Section 73 and 74 of the CGST Act can be initiated. Please understand, distribution, whatever, if you have distributed the excess credit, it can be recovered by issuing the notice, so-called notice under Section 73, 74. And there is a penal consequences under Section 122(9) of the CGST Act, which provides for the penalty for improper availment. Improper availment penalty also prescribed, and distribution of ITC. If there is improper distribution, improper availment, the penalty is prescribed, and penalty is 100% of tax, 100% of amount which is improperly distributed or improperly availed. So that's why these provisions are very important to understand. I have listed out the provisions. See, what is the definition of input service distributor under Section 261? Office of the supplier of goods and or services which receive the invoices under 31 for the receipt of input services. Because IIT is only for the input services, it is not for capital goods or input goods. So, office of the supplier, which is registered as an IIT, will receive the invoices under Section 31 from the vendors and will pay the CGST, SGST, integrated tax, UGST indicated to the supplier. And that office of the supplier should have the factories, office, depots, warehouses, or separately registered office having registration in separate states. And both the office receiving the invoices and office on which the ITC distributed should have the same PAN number. It means it should be the part of the same legal entity. So once it is there, after taking the ITC on the basis of the invoices received from vendors, IIT will issue the invoice or debit notes for distribution of credit of CGST, SGST, IGST in Union Territory on all these units which are separately registered. So this is a mechanism, IIT mechanism in short. Now I will just run through the salient features. IIT is relevant for multi-locational entities. See, IIT is relevant. See, single location entity will not be ISD will not be relevant. Usually you have the factory, depots, retail outlet, branches, division, service outlets in a various state. In that case, and you require the separate registration for that. Only in such case, ISD is relevant. ISD mechanism cannot be used for transfer of credit to the holding company, subsidiary company, group entities, or related parties, as they have different PAN number, because they don't fall under the definition of input service distributor. Input service distributor can distribute only this to their unit, the part of their entities who have the same permanent account number. ISD can be used only for transfer pertaining ITC pertaining to input services, including activities listed in Schedule 2 of the CGST Act. Schedule 2 of the CGST Act lists out the transactions which are deemed to be service. So ISD can be used only for transfer of ITC pertaining to service. In other words, ISD cannot be used for transfer of ITC pertaining to goods, input goods and capital goods. Because for that, if you transfer the goods, you will raise the invoice, normal invoice, and the ITC will be transferred. You cannot, do it through the ISD mechanism. Section 24 of the CGST Act mandates ISD to obtain a separate registration, which is different from a normal registration taken as supplier and recipient of goods under Section 22 of the CGST Act. Suppose in your head office, you may have in most of the head office have two registration. One is a normal registration, and another is the, your ISD registration. ISD is neither a supplier or nor recipient of goods and services. We have to forget that they are neither the supplier of services or recipient of the services. They act like a post office. They receive the credit and they pass on the credit. ISD is solely used for availing and distributing common ITC among the distinct persons, and such distinct person can utilize such ITC to discharge their output liability. ISD can avail ITC because ISD has to avail the ITC. What are the documents on which basis they can avail the ITC? Invoices issued by the supplier of services under Section 31, debit note issued by such supplier, and ITC transferred from regular registration in the same state under Rule 54(1)(a). See, there is a possibility your vendor, instead of putting the ISD registration number in invoice, he put the normal registration number. So in that case, your ITC will come in the normal registration. But in such a case, under Rule 54(1)(a), your normal registration can issue the invoice on the ISD, and that credit can be transferred under Rule 54(1)(a) of the rule. ISD will be able to avail the ITC only on the invoice appearing in GSTR 2A 2B. This is very important because if certain invoices are not appearing in 2A 2B, even ISD after January 22, correct? January 22 is a date where that, you have to match your ITC with form number 2A 2B. So vendors providing common service used by HO and distinct person should raise the invoice on the ISD. You have to instruct your vendor that boss, iska ye service iska, you have to raise the invoice on the ISD number and not on our normal registration number. In case where the vendor provides services exclusively used by distinct person, see, that's a possibility that my vendor is providing services for one particular branch, which is located in some other state. He has a two options. He may raise invoice directly on the name of that branch or on the ISD. If invoice is raised on the ISD will be distributing this to the said distinct person only. For example, some work contractor in Mumbai had done work for the Goa factory and he chooses to raise the invoice on the HO So it is specifically for the Goa factory. So this ISD has to be distributed only to the Goa factory. It cannot be distributed across on some other all other branches or all other distinct persons. So now, manner of distribution of credit. Where ISD and recipient both are located in same state or union territory. So I'm taking the example where ISD registration is also in Maharashtra, and your and recipient is also in Maharashtra. So in that case, what happens if category of the input tax is integrated tax? It can be distributed as an integrated tax. If it is central tax, it can be distributed as a central tax only. State or union territory tax, it can be distributed as state and union territory tax. But I put a asterisk over here. See, there's a anomaly here. Section 20 permits distributor of IGST as IGST or CGST. In the first case, where ISD located in Maharashtra and recipient unit is also located in Maharashtra, and if Maharashtra has a IGST, under the law, it can distribute as an IGST to that unit or as a CGST to the unit. As per section 20, rule says only integrated tax. Similarly, the same section permits CGST, distribution of CGST as CGST or IGST. So in this case, there's an anomaly between the rule and the act. And in my humble view, when there's an anomaly between act and rule, always the act prevails. So you can take the position based on that. Now I come to, where ISD and recipient both are located in different state. ISD is in Maharashtra and recipient, say, is in Delhi. So in that case, integrated tax, central tax, state tax, all the taxes can be distributed as integrated tax. Otherwise, it will not make sense. If the central tax of Mumbai, CGST of Mumbai is distributed CGST of Mumbai to the Delhi branch, it will not be able to take credit. So this is a very sensible provision, and this is how one has to, distribute the credit. And if there is a error in distributing or there is an inappropriate distribution, as I have told you, that excess tax can be recovered under provisions of section 73, 74, along with interest and penalty, as I discussed few minutes back. Now, what are the condition restrictions for distribution? Credit should be distributed through prescribed document containing prescribed details. It means ISD has to issue the ISD invoice, and it is prescribed under Rule 54(1). It gives the list of the details to be given in that invoice. Amount of the credit distributed should not exceed the amount of credit available. Naturally, if you have 100 rupees for distribution, you cannot distribute 102 rupees. So this is the condition. Amount distributed should not exceed the amount of credit available. Again, credit of input services attributable to a recipient to be distributed only to that recipient. I have already talked to you about that, Goa factory example. What's contract of a Goa factory services had to be distributed exclusively to that Goa factory only. And the balance credit attributable to various distinct person has to be done on the pro rata basis, turnover of the individual units upon the aggregate turnover of all units during the relevant period. Now, what is the turnover and what is the relevant period? What do you mean by turnover? Turnover means taxable supplies as well as exempt supplies. And exclusion means, from that, you did not include for calculating the turnover The supplies liable to tax under RCM, you should not include. And CGST, SGST, UGST, IGST, and cess is not to be included. Is not to be included. So net turnover, it means turnover of the taxable supplies, turnover of the exempt supplies. Even exports will come. Even the supply to the EOU will come. Everything will come in the taxable supplies, and exempt supplies, in my view, will include the non-taxable supplies also. Meaning of the relevant period. What do you mean by relevant period? Relevant period means recipient of the credit have the turnover in the state, union territory in the preceding financial year. Preceding financial ka turnover for every unit you have to see. So relevant period will be preceding financial year. On that basis, you have to allocate. It is possible that some of the recipient credit do not have any turnover in their state in an earlier year, preceding financial year. Then you have to go by the last quarter for which details of the turnover of all recipients are available previous to the month during which the credit is distributed. See here, friend, you have to understand one thing. Suppose I have 10 distinct persons. Out of that, only one distinct person has started in this year. So I have to take, suppose if I am distributing the ITC for the month of July, then I will have to take the turnover of April, May, June quarter of that particular unit. And for all other units, also I have to take turnover of that particular quarter only. Otherwise, it will be lopsided calculation. So if you read that line again, last quarter for which details of turnover of all the recipients are available. Means, once you are taking, if a one branch or one depot or one distinct person did not have that full year turnover, then you have to go on the quarterly basis. And quarterly basis means for all units you have to take on the quarterly basis, and then you have to work out the ratio. Recipient units can take ITC based on the ISD invoices. Means recipient units, like, you cannot take the ITC without the invoice of the vendors. So similarly, the distinct person cannot take the ITC without the valid ISD invoice. And what are the items is to be included? This is the matter of details. I will not delve into it. These are the things. It is this PPT will be shared with you, so I am not going through it. Reduction of ITC on account of the credit notes. Like, if the supplier includes, he gives you credit note for non-provision of the services, for cancellation of the services. This, the ITC distribution of ITC also to reduce to that extent. So I'm not going into the details for the want of time. Yeah, because I have to deal with certain issues. Again, ITC should be distributed on monthly basis. It is not that you can distribute at your whims and fancies. Every month it is to be distributed. ITC available for the distribution month should be distributed in the same month. Details of distribution to be furnished in form number GSTR 6, means this return of ISD before 13th day of the subsequent month. And nil return must be filed even if no ITC is available for distribution in the month. Late fees of ₹50 is prescribed per day for delay in filing of the GSTR 6. ISD, and again, delay filing of the GSTR 3, ₹50 will be, it's prescribed. ISD to identify the block credits and ineligible credit and separately distribute eligible ITC and ineligible ITC. So the person sitting in the ISD has to bifurcate the credits, ITC, between the eligible credits and ineligible credit. And accordingly, it has to be distributed. You have in the form 6, it is very clear. Eligible ITC is so much and it is distributed separately. Ineligible ITC is so much and distributed in this manner or this proportion. And credit needs to be distributed among all units, all separately registered units, whether that unit is taxable units, whether that unit is non-taxable units, whether it is fully exempt unit or export-oriented unit or the SEZ unit. So ITC wrongly distributed to a particular recipient or ITC distributed in the wrong proportion, issue the ISD credit note to the recipient whom it was wrongly distributed or excess distributed, issue the ISD invoice to the ISD invoice or debit note to the recipient to whom it actually pertains or to whom it was sought distributed. Export-oriented unit can use the ITC ISD credit because if they are doing 100% export, so they can either to pay the IGST on export with payment of tax, and this ISD credit also can be used to pay the tax on the exports, to discharge its liability on domestic transaction. If EOU has certain domestic transaction, so whatever ISD credit they've got, they can definitely utilize it for the domestic tax on the domestic transaction, or they can claim ISD credit, refund of the ISD credit as part of the unutilized ITC. And similarly, is the case for SEZ unit. Similar is the case for a SEZ unit. And we have the authority in the form of Britannia Industries Limited within Union of India, Gujarat High Court, which says claim of the refund of ISD credit as part of unutilized ITC is available. So whatever applies to the SEZ, we can safely apply to the EOU also. ISD credit distributed to non-taxable unit or fully exempt unit definitely will become the cost to the entity. And this is the whole purpose of the ISD. So, ISD credit distributed to the non-taxable unit or fully exempt unit will become the cost to the entity. And friends, as I have told you, recovery of credit distributed in excess, we have section 21, which empowers. It can be recovered along with the interest under section 73 or 74 of the Act, and penalty for taking or distributing ITC in contravention of section 20. The penalty is prescribed under 122(1) Roman 9. Higher of 10,000 or amount of ITC availed or ITC distributed irregularly. So friends, we have to be very cautious and conscious while, applying the ISD mechanism to our organization. Now, I am coming to some issues. This is very important. So, whether the ISD mechanism applies to one minute. Yeah. Whether the ISD mechanism applies only to those services which are exclusively used by distinct entities, or also the common services used by the distinct entities which invoices are received and accounted for by the centralized office. Different. There are two type of services. One, we know that this is exclusively for my Goa office. And one I know, for example, so many services I am taking, auditing services, lawyer services, or, rent of the head offices. In fact, benefit of all these services are even going to the, being, even the branches and the distinct persons are benefited out of it. It is commonly consumed. It is consumed by every unit or every establishment of a business entity. So, in my view, ITC in respect of service actually used by distinct entity can be routed through ISD, and same should be distributed only to such distinct entities, and even the common ISD has to be distributed. Now, whether the ITC in respect of the following common services used by the distinct entities should necessarily be distributed to all such distinct entities, or it can be cross-charged. This is a very, very, highly debated question. There are certain services, which is common services. See, auditing services, banking services, royalty for IPR, telephone services, tax center services, HO rent, advertising, staff insurance, legal service, security service, all these services usually vendors raise the invoices on the HO or centralized office. So, whether this is required to be routed through ISD or it can be cross-charge. This is the, very, very highly debated question from the inception, from July 2017 till date. So there are two views are there. Based on the following reasoning, GST authority may take a view that ISD is mandatory and optional for even for those expenses. Why? They will say that, what are their logic and reasoning? Above services are common services basically used by the distinct entities. Benefit of that is, distinct entities get that benefit of that services, and hence credit thereof should be transferred to the respective distinct entities through ISD mechanism. They are going by that consumption. They are going by that, the services are consumed ultimately by all the entities. So that ITC should go there. ITC thereof cannot be availed by HO or centralized office because it belongs to, this used by everyone. So, entire ITC, HO cannot take it. Section 24 of GGS mandates the mandatory registration, compulsory registration for ISD, irrespective of the turnover. So they say it is mandatory. ISD is mandatory. Rule 39(1) starts with the word input service shall be distributed. Input service shall distribute. Shall means, shall denote the compulsion. And we have certain advanced ruling, which says Tata Sierra Airlines advanced ruling, Cummins advanced ruling, we say that ISD is mandatory. And the statute specifically provides for option. Wherever there is a legislative intent to grant an option to the taxpayer. And this government will say that we have not granted any option to you specifically for, we have not, such option has been not granted specifically for the ISD. So, and another argument of the government is, if you treat ISD registration or ISD mechanism optional, then entire provision of that ISD sections or provisions or rules become redundant, superfluous redundant, and such redundancy is not allowed in the law. That will be the argument of the government. So what happens? July 2007 se leke, I have seen so many companies are not following the ISD mechanism. And the people were under the general notion that if you do the cross-charge, ISD is not necessary. So what happens now? What is the real legal position? Department ka view can be that, but now, based on the following reasoning, a strong view emerges that ISD is optional and not mandatory. It means you can take ISD as an optional, not mandatory. So prior to amendment brought by Finance Act 2024, Section 20(2) of CGST Act reads as under. Please, this is very important. Section says 20(2), the input service distributor may distribute the credit subject to following condition. So may gives the inference that it is optional. So another view, very strong argument. HO is a separate entity under GST legislation. One can take the position, whatever services it takes, it consumes the covert services to provide the support services to the distinct entities. And the business, what is the business of the HO? HO's business is to run and support the branches and the credit thereof. Because if the HO does the cross-charging, it means it is the taxable services, and hence the credit thereof should be taken by HO and did not be distributed through the ISD mechanism. And fortunately, CBIC has issued the FAQ on banking, insurance, and stockbroker services. They have clarified that HO has an option to either cross-charge the services or to raise an ISD invoices. So this FAQ said, and apart from FAQ, we have a more solid, support. GST Council in 50th meeting, clarified there is no intent in the present provision of CGST Act to make ISD mechanism mandatory, and accordingly, it may be clarified through the circular. GST Council in the 15th meeting has given the direction to the GST authorities. Please clarify that there is no legal intent to, make the ISD mechanism mandatory. And CBIC has come out with a circular, this particular circular, where it is clarified that as per the present provision of CGST, these are the words that I am reading from the circular only. They clarify that as per the present provision of CGST Act and CGST rule, it is not mandatory for HO to distribute ITC by ISD mechanism. CBIC circulars, and friends, we all know that CBIC circulars are binding on the tax authorities. So there is, we have some reprieve. For the past period, we have a defense to say that ISD was not mandatory. And Section 22, which was using the word may, has now been, in the Finance Act 2024, the section has been amended. And now the Section 20(2) reads, the input service distributor shall distribute the credit. It means the government intends to make the ISD mandatory from the date on which this amendment becomes effective. And this amendment will become effective only when it is notified. And as of date, this amendment is not notified. So we can safely say up to, from July 2017 up to till date, one may take a position that ISD is not mandatory. Whether ISD can avail the credit in respect of tax paid under RCM. This was a very big issue because ISD defined under 261 to means office receiving the tax invoice under Section 31 of CGST Act by the supplier wherein GST is charged. What is ISD? ISD is just a post office. He gets the invoices from there. In case of RCM, supplier does not issue the tax invoice under 31 and he does not charge the GST. So, and Section 9(3) of the CGST Act cast an obligation on the recipient of goods or service to pay tax under RCM. As ISD is not the recipient of goods or services, see, as I have told you, it's only a post office. ISD is not a recipient of goods or services. It cannot make RCM payment. And Section 9(4) also cast an obligation on the similar lines. So, because Section 9(4) Act casts an obligation on a registered person receiving the specified goods or services. So, 9(3), 9(4), actually ISD is not obliged to pay tax under reverse charge under 9(3), 9(4). So, there is, if he doesn't have in GSTR 6B, if you see the GSTR 6, the return of this ISD, it does not provide any space for showing the details of inward supply on which the payment is made under RCM. So all these things clearly imply that RCM liability for common expenses accounted, it cannot be transferred through the ISD route. So what you should do, in my opinion, you should discharge it from your normal registration, and then if you want to distribute it, transfer it from the normal registration to the ISD through the rule number 54(1)AA, and thereafter you can distribute it. But this anomaly has been now amended by Finance Act 2024. They amended the definition of ISD. They amended Section 20, and this enables the ISD to make payment under RCM. Mr. Nischal, I think 6 o'clock is there. Can I extend it for 5-7 minutes, please?
Yes, sir, you can.
Yeah, sure. Because, I am on the I'll be completing with 5-7 minutes. Yeah. Because I'm dealing with all the important issues. Can ISD take ITC of the invoices of a particular financial year or after November succeeding the said year. Section 16.4, correct, sir? Section 16.4 applies to the registered person. And if you see Section 294, define the registered person to mean person registered under Section 25 of the CGST Act. ISD is registered under Section 25, read with Section 24 of the CGST Act. And in my view, ISD is bound by the time limit prescribed under Section 16.4 for taking the ITC in respect of such invoice. So I have a bad news. In my view, 16.4 applies to the ISD also. So credit is gone. Like in a normal registration, this credit goes. This credit also will go. In case of where the payment to the vendor is delayed beyond 180 days, whether ITC is to be reversed by ISD or the distinct entity to which such ITC was distributed, they have to reverse it. See, proviso to Section 16.2 applies to the recipient. Section 2, this particular, provision is being, it is being laid out in proviso to Section 16.2. If you don't make payment within 180 days, you have to reverse the ITC. So, Section 2, it applies to the recipient. And when I'm going through the definition of recipient mean a person liable to pay a consideration. When the PO is issued, you are saying that you write the IIT number, he is the person on whom you have to raise the invoice. It means that person is liable to pay consideration. So HO bracket my IIT registration is a person liable to pay consideration, and it appears to me at least that IST needs to reverse such ITC. So how it can do that? ISD will have to raise an ISD credit note on the distinct entities for excess credit distributed on this account. So ISD can reverse it and they can give the credit note so that their account is squared up, and that non-payment reversal of the non-payment ITC will ultimately go to the distinct person through the mechanism of this ISD credit note. So now, last few minutes, bear with me. Amendment by Finance Act 2024 is very important. That's why I appreciate the Taxmann to bring out this webinar in a very timely manner. 2024 Finance Act has already been passed. At any time, the provisions can be notified, and ISD will become mandatory. Till date, it was not very clear it is mandatory or not mandatory. The government authority has come out with a clarification, it is optional. But now after this provision, after these provisions are notified, Finance Act 2024 is notified, this will become mandatory, and it's we need to be very, very careful now. Definition of input service distributor. See, what is the amendment has been made? Definition of input service distributor under Section 261 of CGST Act is amended to allow the distribution of ITC of invoices in respect of the service liable to RCMK under that they have said it. Another amendment, Section 20 of CGST Act is amended to make ISD provision mandatory by replacing the word may by shall. Section 20 bracket 1 of the CGST Act is amended to allow ISD to distribute ITC in respect of the payments made under RCM. Above provisions are yet to be notified. Once notified, ISD mechanism will become mandatory in addition to requirement of the cross charge. In short, the life of a chartered accountant or life of the executives working in the tax department will become more difficult, because ISD distribution and cross charge will operate simultaneously. Please understand, it is not that if ISD is there, so cross charge is not there, cross charge is there, ISD is not there. Both will be there. And how it will be there? Cross charge and ISD are two different concepts. Please understand, cross charge and ISD are two different concepts. Cross charge is what? It's a charge of tax on the deemed supply made by HO to the centralized office, made by HO centralized office to distinct entities, different registrations. And ISD what? ISD means distribution of the common ITC of the invoices received by HO among the distinct entities. This is an allocation of expenses, ISD. And cross charge is a, charge for the services which has been deemed services which has been provided by HO to the distinct entities. Inference can be drawn from circular number 199 as to when ITC is to be distributed through ISD or when cross charge is done. This circular, see, because there will be big confusion. What will be covered under cross charge? What will be covered under ISD? So when the cross charge is to be done, the cross charge is to be done attracted when the supply of the goods and services to distinct persons, and cross charge would be there for internal transactions, only for the internal transaction between HO and distinct persons. Because they have notionally said HO is a different person. They provide the services to distinct person. So all internal transactions will come under the cross charge. And when the ISD will come in, well, the ISD will be, when the credit to be distributed through ISD. ISD comes into play when the HO receives the invoice for input services pertaining to one or more distinct persons. If I am receiving auditing services not only for the HO, auditing service for the accounts of entire company, which include the account of the branches also. Then, basically, if I am paying for IPR is for the marketing of certain product, which has been dealt with by all the branches. So these are the, if I'm receiving the invoice for such kind of input services, it is for all the branches. So their ISD will come. So your ITC on that services has to be distributed. ISD is applicable for supplies procured from external vendors. See, there were internal services. Cross charge will be for internal services, and ISD will be from external vendors. Services you are procuring from external vendors, and invoices are received by the centralized office. For that, ISD will be there. So friends, this is something, I have just put a illustrative list. For example, what are the external expenses at entity level? Audit fees for income from consultant, advocate fees, advertisement services, banking services. These are illustrative list. Then internally generated services, that is IT, HR, admin support, payroll processing, salary of CEOs, all the things. So friends, your job will, one more job will be there on you to notionally divide your profit and loss account into internally accrued this thing, services, internally generated services and externally generated services, and you decide what you need to cross charge and what you need to do. So way forward. Last slide, Nishal, and I will be, closing my presentation. Once the amendment made by the Finance Act in section such and such, 261 and 20 of the CGST Act, it will be necessary for business entity to go for ISD as well as cross charge. Multi-locational business entity having the multiple registrations should identify the services to be cross charge and services which are routed through ISD. So as I have discussed, I just put a summary over here: internally generated services and external common services which are procured without GST. All that needs to be cross charge. All that needs to be cross charge. For example, electricity used at a HO. It is service, or or other services. Forget electricity. Electricity, that's the controversy, it is goods or services. For some services on which GST is not leviable, you appoint a doctor for the health checkup of your corporate employees. So if he charges something, you are procuring service without GST. All these things, all these services, in my view, need to be cross charged. and input services are just procured by HO and not used and consumed, which is pertaining to all units. External services, which are procured by the HO, which are not used, that is ISD. What you have to do, obtain the ISD registration at earliest. Because once the government notifies, and thereafter you are going for ISD registration may take 15 days, 1 month. So there will be a problem of that services which you have procured before that date, before the registration date. And what you need to do, intimate through PO, purchase order or work order, ISD registration number to the vendors supplying services for which ITC distribution is to be done through ISD. So you have to sit today and find out for which services you are going to do ISD and for which services you are going to do the cross charge. And you have to give registration number of ISD so that ISD registration number that vendor puts it on an invoice so that it flows to your ISD entity. Regular GST registration should not be given to vendors for services for which ITC distribution is to be done. And if you have ERP systems, you have to perhaps revisit your ERP system and the documents, and you need to modify suitably. I think with this limited time, I'm through with my presentation. Ishal and I. So is there any queries are there? If the time to answer queries are there, I am willing and ready to answer if there are queries. Yeah. If HO is a new, I will read the query and I will try to answer the best of my ability. If HO is at New Delhi making taxable supplies and the branch office at Maharashtra making exclusively exempted supply, the GST registration taken in both Maharashtra and New Delhi due to registration under the previous act. Now to avoid ISD compliance, can we cancel registration of the branch office? Also, in case we do this, will there be any future consequences of GST demand? Friend, in my view, if you are dealing in exclusively exempt supply, then you may not register yourself. But I have to check up the definition of the aggregate turnover. So whether this will be required, just see the definition of aggregate turnover. See, even one branch is having totally exclusive exempt. See, exclusively exempt supplier of exclusive exempt,
Pan India turnover. Pan India turnover.
Mr. Sikhaji, I personally feel I am not very clear on that, but I believe, if you're, you have to see that, you have to take your Pan India turnover. So if you have taxable turnover in one of the units, having the same PAN, then you may have to continue the Maharashtra registration. This is what my view. And if it is Maharashtra registration is there, in that case, you have to go through that hardship of this ISD, compliances. Second query is from Krunal Mehta. In situation where billing is centrally at HO and branch officer cross-charge HO for the cost incurred at branch, in such situation, whether HO should cross-charge for the common services, since such cross-charge is again going to come back and cross-charge for the branch. So you are saying, in my opinion, branches are, we are also facing this issue, but we have taken a practical position because we are saying here the branch is supporting to the HO and they are cross-charging it. So HO is doing entire business and branch supports them for doing the business. That's why the branch is charging. In my opinion, this case, we have taken the position that HO, we do not cross-charge it. Otherwise, there is no end to it. There will be, to and fro, so basically, you can take the call that there is no need for cross-charging from HO because HO is exclusive doing the centralized billing. It carries on the business and these people are supporting them for carrying on the business. So, in my view, it may not be necessary for HO to cross-charge. You check query, two queries. Yeah, if your HO is having 100% taxable turnover, then there's a departmental circular also. There's a nil value is also value, and it is a proper compliance of Rule 28. Yeah. Then the query from CA Deepika Agarwal, after it gets notifies, will circular for banks and insurance companies still hold good? Ma'am, you mean to say the bank and their circular says, what is the circular?
That ISD is.
Ma'am, in that case, once the change in law is there, the circular which are inconsistent with law, that will not be, that will not work. In my opinion, government will come out, will withdraw the circular or may come out with a new circular. I have already answered, Sanjay ji. In my opinion, once the law makes the ISD mechanism mandatory, any circular which are inconsistent with law and circular which are issued prior to the change in the law will not hold good. See, as per recent circular, Push, you have said, recent circular says cross-charge is not necessary because you are putting a nil value and the recipient is having 100% taxable services. Hence, cross-charge is necessary, but you are doing it at zero value. That is what the circular says. But in my view, if practically the recipient unit will have certain exempt turnover or maybe having very minimal turnover. If it is 100% turnover is taxable turnover, then this circular issued, even the nil value is a value that should protect the company, that should protect the assessee. But in my view, if there is a 100% taxable turnover by that particular the recipient entities, then you should value at least at 1 rupees so that there is no controversy, because there are certain provisions. I have come across the so-called notice, you have not issued the invoice for cross-charging. We have showed the circular to the officer. He said, but raising of the invoice is a different provision. We'll charge you the penalty. So, if you are having this kind of situation where you can take, the recourse to the proviso to Rule 28, you should put some nominal value on the invoice and take it, rather than keeping it nil. Circular, you misinterpret a circular. How can we distribute the common services related to both holding company and subsidiary company, but invoice received by the holding company GST number, whether the cross charge or normal billing? Nilesh, if common services invoices are received by the holding company and holding company in turns, and these services are shared services, then holding company has to raise an invoice on the subsidiary company And this is the only way you can do it, or at the most, at threshold, you can tell the vendor to divide both the invoices. But if holding company receives, holding company cannot use the ISD mechanism to transfer the credit. They have to issue the invoice on the subsidiary company. Yeah, Sanjay ji, actually there is no exemption for internally generated services to cross charge. See, that circular says, okay, for internal generated services, if you are, and if you are, if it is a zero, this thing, nil is also value. That is what the circular says. So cross-charging nil is also value, but I have my own doubt. If the other company is not dealing, if you read the circular very carefully, it talks where there's a transaction between the, head office and the branch where the, recipient is getting the full, recipient is engaged in the exclusively in the taxable services. So in my view, in that case only the circular applies for the nil value. It is not exemption as such. See, this I have already answered, Mr. Harsh. As far as salary, whether salary is to be included in the cross charging, there is a clear circular that it need not be included. And as far as common services, as I have told you, if the government has come out with a clear circular, when I'll be distributing my presentation to you, the circular reference I have given, it says where the common services as well as HO services cross-charge to all branches, will it make questionable? No, it will not make questionable. It will not make questionable because IID is optional and you already cross-charged it. So you are complied with the provision. I have some same query as the first question. I am not mandated required to be registered at the branch office, but have the taxable turnover in other state over 20 lakhs rupees. Would I liable? Exactly, somebody has asked me this question. There is an exemption. 1 meter. I'll just check of the provision.
So pan
Hey, that is right, but section 24 exclusion hai. Give me 1 meter, please. Twenty-three.
application number 5 is
So check what it says.
person.
Have the gentleman is anonymous attendee. So let me. Okay. That is okay. One branch is having exclusive value. So can you not take are you excluded from, but which provision?
So pan data from
See, our view is, yeah.
same pan.
See, my personal view is for deciding whether you require registration or not, you have to take aggregate turnover of PAN India. and your pan India turnover, if it has, the taxable turnover, as you said, you have the taxable turnover and only for one particular branch, you are having the exempt supply. In my view, that registration of that same branch is required to be done. And unfortunately, IAD credit you have to pass on to that branch and it will become cost to that. This is what my personal view. Then also, with a caveat, I will check this again. And I will, if possible, I will come back to Taxmann saying what is my final view on this.